Hey guys, John Polemy here, Actionable Intelligence. One of the viewers had a question regarding the last uranium bull market and my views on it or how I played it. Basically, during the last uranium bull market, which happened last decade, I was a subscriber to Doug Casey's International Speculator, and I remember he wrote a 20-page article on the uranium market. And at the time, the uranium market was similar to what we're seeing today. We had a very, very low price that was substantially lower than the price or the cost to mine uranium. So the industry was basically like it is today in liquidation. The difference was back then, there were only like 3 or 4 publicly traded uranium companies. I remember there was Cameco, I think Denison, some company called International Uranium Corporation, and I think Paladin Energy had just come public then. That happened to be the stock that Rick Rule made a lot of money on. It went from like 10 cents to 12 bucks. But anyway, it wasn't that difficult to get into the uranium market. You didn't have to really think too hard about it. If you understood the supply-demand dynamics and the fact that production, the cost of production was higher than what you could sell it for, it was kind of a no-brainer. The problem I had was at the time, my skill sets were not what they are now. My analytical ability was a lot weaker, and I didn't really understand the full dynamic or how to really play the market or how to take advantage of the price increase when uranium went to like $135 a pound over the next several years. So one of the things I wanted to talk about today was is references that is, I mean, right now there's probably 20 or 25 publicly traded uranium companies. That's down from about 300 or 400 or 500 at the peak. And a couple things you need to be aware of as this next bull market gets going is that there's not that many competent uranium exploration teams. We've talked about this before. When you are speculating in junior resource sectors like uranium, you really have to be cognizant and aware of the people that you're dealing with. You need to make sure that these people are competent and that they have experience in the sector that they're in. What we tend to find in these junior resource markets is as the price of the commodity goes up, the sector becomes very popular, and that stimulates a lot of people, promoters and hucksters and bullshit artists up in Vancouver and Toronto to take their moose pasture in Saskatchewan that they were currently marketing as a zinc property or a cobalt property and start saying, oh yeah, we're going to start looking for uranium. They'll change the name of the company to XYZ Uranium, and then they'll go on the show circuit and start telling retail investors about this great moose pasture that they have and what they're going to start. They need to raise 10 or 20 million dollars so they can start drilling this great drill program they're going to have. So you need to make sure you don't get caught up in that. It happens. We just saw it happening recently in this cannabis thing that's going on. Everybody's getting into cannabis and marijuana. Simultaneous to that was the cryptocurrency boom. Everybody got in late on that, then everybody got in there, so they were going to start mining cryptocurrency. That kind of died off. So one of the things you really need to focus on is the people that you're getting in business with, because that's what you're doing when you're buying these stocks. You need to make sure that they're competent people, that they actually have a background in uranium exploration, that they know what they're talking about, and they're not just some Johnny-come-lately that shed his cannabis skin, and changed the name of the company to XYZ Uranium just to raise money. Because that's one of the things you're going to see happen. That happened during the last bull market. We went from, like I said, 3 or 4 companies. Before the thing peaked, we had 300 or 400 companies. And there certainly wasn't 300 or 400 competent uranium exploration teams. So that's number one. Number two, one of the things you need to be making sure that you're thinking about is we don't know how long it's going to take before the uranium price starts moving higher. It could take 6 months, could take 12 months, could take 18 months. We don't know. No one knows. There was an excellent podcast by Michael Alkin yesterday, or the day before yesterday, and he had a guy on there named Steve Malby. The guy used to work at Cameco, and he's advised Kaz Atomprom. He currently is at UEC in business development, I believe. But anyways, this guy's been around for 30 years, and they were talking about, how uranium is priced, how utilities contract for it, and what we need to be looking at. And this is the kind of people you want to listen to. People have been in the market for 30 years in different roles, and they're plugged in. So I'm going to put a link to that interview in the comment section. Please look at that if you're interested in this uranium market. The other thing you need to be cognizant of is, or thinking about as it relates to the timeliness or the length of time that we have to wait until this market gets going, is the fact that we're dealing with a lot of junior resource companies. With the exception of Cameco and I think Denison, no publicly traded uranium companies have any revenue to speak of. They're not mining uranium. I think maybe Energy Fuels has a little bit, but most of these companies are junior companies. They're exploration companies. They have no revenue. So you need to look at the cash that they have on hand. Is that cash that they have on hand going to be sufficient? What's their burn rate? Burn rate means like how much are they spending a month? What are they doing? Are they drilling right now? Do they already have a property? Do they already have a reserve estimate? Or they need to raise more money? Because we don't know how far it is across the desert to the promised land of higher uranium prices. And can the company that you're putting your money into, that you're hitching your wagon to, can they make it across the desert without having to go out and raise a bunch of money? I mean, valuations are very low, guys, and you don't want to be raising money in this market. You're going to have to sell a lot of shares to raise, a small amount of money, and you don't want to get caught up in that. So people, make sure you got the right people, make sure that the financing's there, that they got financing, that they have a property that's actually legit. It's not moose pasture in Saskatchewan that's being remarketed, and, making sure that you have the financing, that you got money on hand to get across this dry period. So you don't want to get caught up where you're getting caught up in additional financing, getting diluted away, getting your position diluted before this big move comes that we're anticipating. So that would be my advice to be thinking about, because guys, one of the things I want to make clear is, I don't say this to be, for hyperbole purposes or to be provocative or to get, as clickbait. I actually believe that this upcoming uranium market, based on what I saw during the last one, has the ability to add 3 zeros to your net worth. It's just that simple. But you have to play it correctly. You have to make sure that you're buying the right companies, that you're hitching your wagon to the right rocket. Because when this thing goes, it's going to go quick. I mean, we're going to see prices jump, and the initial, takeoff is going to be pretty good. And you want to make sure that you're not, futzing around trying to figure out what to buy. You need to be doing that work now, and as you're accumulating these shares, making sure you're accumulating the right companies. Now, I'm not going to get into who I think the good companies are in this particular video. That's what my newsletter's for. But I can tell you that you do have to do some work, because there's a lot of good companies out there, but there's a lot of junk out there too, and you don't want to be holding the junk. You want to be holding the good companies that are hooked up, that got good product, good properties, got the right people, got money in the bank, and can get across the desert to the promised land. So that's my experience from the last bull market. I didn't play it correctly. I didn't know what I was doing. I know what I'm doing now, and I'm trying to give you guys this knowledge and give you guys my experience, so that when this thing takes off, you can play it right and you can have some life-changing. This could be a life-changing event, and I'm trying to make sure that you don't make the mistakes I made last time. I should have already been out of this game. I should be retired on a beach in Bali right now, but I didn't play it correctly the first time. So. More videos to follow. I'll expand on some of those mistakes that I made, but let's learn from previous mistakes. Let's not waste time, and make sure that we do the moves correctly, because if you, like I said, if you play this correctly, you can definitely change your life. So that's it for this video. Ask that you guys keep supporting my channel. I appreciate the comments. And send me suggestions on different videos or topics you want to hear about, and I'll be more than happy to discuss what I know or do the research and look into it. So, like I said before, appreciate their support. It means a lot to me that people think that these videos offers them some value. So, we'll talk to you soon. Thanks.